Yes, so good morning, everyone. Let's start with our market commentary. Now, what we see over here is Nifty 50 chart, and it's basically from the weekly basis. One point, as we were trying to say throughout this entire expiry, after the gap which was built on the weekly levels, 10,650 or 10,700 are like the huge resistance on the upside. Now, what I see over here, starting of the week, is really, really bad. Why is that so? Because it is clearly visible now. If you see, it has started going down. Okay, so the start of this expiry week is going to be very, very crucial. Now, two things which are important that I see on the weekly chart, and obviously it can be seen in the daily as well. But the weekly gives you more prominent answer on the broader scale. Now, what I see over here on the weekly basis, the previous week close, okay, is already been breached. Previous week low is already been breached, or I can say Friday's close and Friday's low both are being breached on the daily basis. So this clearly shows a downward trend is there on Nifty right in the morning itself, and it had opened little gap up on top of that. Now, the point which one we should understand how far it can go down. So as we were always saying, during the expiry week, a spike of downside can be seen. Now let us understand where down it can go. So the first top, which normally you see, would be the spike which basically was seen prior. So when I go down and see over there, so straight away a downside support can come in the range of 10,300 or so, right? So one thing is clear that the straight fall which is being seen, obviously it will keep going down till 10,300, and going forward, okay, couple of days now towards the expiry, you can find one more fall pushing him down maybe to 10,100 also, right? And after this a complete fall gets terminated or gets done. So this is where we are looking at now, a complete week setup. And on the higher side, we were clear about the resistances. And now today, below yesterday's or Friday's close or below Friday's low, clearly signals a downside, right? And the point what we need to understand after this important crucial level is 10,300, and then a free fall is again possible towards 10,100 or so. So this is on the weekly front. Let's see the bank Nifty on the weekly front to understand is it the same or not. Obviously the fall was brought by bank Nifty in the last week. Now what I see even on bank Nifty on the weekly chart, higher resistance, now we are very much clear about 25,800 to 26,000 will become a huge resistance for bank Nifty going ahead, and this entire gap. More than that, what I see over here today, again same the way it happened in Nifty, it opened gap up and it is pushing itself down. So if bank Nifty goes down, which is one of the support points or key areas of for bank Nifty, if we go out and see, broader range is 24,800 or so. So yes, clearly it is below 25,000, but more prominently when I see, this was the prior resistance which was maintained, and now multiple level of supports have been taken around the level of 24,800. So I would want bank Nifty to come here and settle for some time rather than going down further. But what we need to understand, if this level might be taken today as a support, but you need to understand there is a bigger downside available in bank Nifty if this level is not taken properly over here. So if they do not take support at 24,800, what we see over here, then straight away on the weekly chart, it can go down to 24,000 odd levels. So you can see a fall of 1,000 points in bank Nifty, which is also possible, right? Which cannot be ruled out because now more 3 days are left towards the expiry, and you never know, towards the expiry a spike down to these levels is clearly possible. But one thing is very much clear, we'll keep an eye on 24,800, 24,700. So this was the last one spike on the Gujarat election day. It took place from 24,600. So there are two basic supports, a small support coming around these range, but it is clearly visible bank Nifty is now clearly on the downhill. And what we see over here, the way it had gone up so fast, and the similar way it has come down fast as well. So it should take support around this area or range, and if it does not, maybe now 3 more days are left, 24,000 can be on the cards. So try to understand, if there is a 1,000 point fall on Bank Nifty, 300 points fall on Nifty is clearly visible. So if I add 300 points to Nifty on the downside, clearly my target of 10,100 comes into picture. So everything seems to be more realistic, because if the fall takes place, Nifty is coming back to its bigger support zone area, 11 and 10,100 or so. So it is pretty much clear that on the bearish side, I agree everyone is bearish, but this time the fall can be brutal, forming a test mode towards these support levels. So keep that in mind. Bank Nifty clearly seems to be the weakest link. Now let's go and see on the daily chart what's happening on Bank Nifty. Now daily chart, things are very much interesting to understand. Why is it so? Let's see. What I see over here, as we were saying, there are multiple supports taken around this area of 24,800 on the weekly chart as well. And then once you take the support, the rise was very fast. Once the rise took place, the fall took place. And the most important point which I would want to note, this was the base which was made by the Moribazu. So the big fall that had happened in 3 days after the budget, 1, 2 and 3, this was the lowest base which was formed. And now what's happening over here, number one, it has breached the base, right? Number two, it is now also closing or going below the low of that day. So what's happening over here on the daily front also, things are not looking that good. Agreed that when it goes on the downside, it comes on a proper good base where you have seen multiple kind of supports creeping in. So after removing the base of Moribazu, it is clear indication that things are not going good for Bank Nifty. Maybe for today's fall, this much might be enough and might take a bounce from here. But the crucial level for me now, even on the day or intraday basis, is 25,125. Why am I saying that 25,125? Is because the Moribazu level is there, the support range is there, and what I see over here, 25,125 was yesterday's close, previous day's low as well. So two things having set together, it opens today a gap up and then it tries to inch down. So if I go down and see even on the hourly chart or 15-minute chart, things are clearly visible. So what I see and understand now, this was the level which I was talking about, where quick buying took place after the gap down mode. It came back down even on Friday. Today it tried to inch higher from that level by gap up, and then a full pullback has been seen on the downside. Now what happens over here, if there is a downside, it will go up, it might test this again. So 25,125 or 25,120, and on the lower level if we see around 25,050. So 50, 100 points above 25,000 level can be tested once again, and then a brutal fall can come by. So keep that in mind. So Bank Nifty seems to be clearly out of the blue. So it's basically, you cannot be bullish on Bank Nifty, which is fine. But the problem over here is now everyone will start becoming bearish on Bank Nifty. But this is what we need to understand. It was gap up, it became bearish, it went yesterday's close, it went below yesterday's close. More than that, this is an important level of Moribazu as well. So all things are going in together for a bearish mode. So what I was trying to say today, we went from a weekly chart, we saw the bigger picture, we went to the daily chart, we went and we understood the bigger support level, and what happens on the 15 minutes or 5 minutes intraday chart, the same stuff. So when you see three things happening together in the same mode, you are bound to get positive results, right? So your gap up going down below Moribazu rates, it is obviously clear that it is out for a bigger fall, right? So it might come back, it might come for a test, and then again you might find selling coming into place. So this thing is one which we need to keep a look on, and similar case would be for Bank Nifty as well, since Bank Nifty is pulling Nifty down one way. So weekly chart has been seen and understood. Now let's go on the daily front. Now when I look at the daily front for Nifty, things are little different. Now what I see over here on the daily front of Nifty, this was the low which was made, Moribazu was formed, or a quick buying took place. It came back down, and the most important level was this small gap down, then gap up, right? And this level is now being taken out by Nifty. For me, Nifty important level is 10,282 because this is the level where the Moribazu or the quick gap down mode and buying had taken place. So unless this doesn't breach, there is no case of Nifty running towards 10,100 or so, right? So let's keep holding on to these levels and see whether it will come there. So falling there is easily likely, but breaching this level is very, very important for us. Now, second point, as I said, this is a small, it's called abandoned baby kind of structure in the candlestick pattern. But the point here is it opened gap down, it opened gap up, and then it was trying to sustain this gap. But what happened in the morning, it opened up and it filled the gap almost there, and then it inched downwards, right? And now it is inching downwards below this gap down level which had formed prior. So clearly visible that 10,282, 275 is there on the cards. Now when I go inside and see for 1 hour chart, things are looking pretty much the same, right? The way it is for Bank Nifty, a quick fall off. It is taking out the important level, as I was telling you, gap down and gap up point. And now if it goes below this, it is a clear indication of 10,285, right? So straight 100 points fall is possible, not right now, right away. As we saw, Bank Nifty might take a bounce and then a correction can come. Similarly, Nifty can also take a bounce, and from being below 10,400 or 415, Nifty will see a fall towards 10,280. So 200 points fall, 150 points fall is easily likely. There are good support levels which are getting breached. If I go out and see even the 5-minute chart, things are clearly visible. So it opens gap up, straight away selling takes place, tries to inch higher, but then it tries to remain below yesterday's close. Below yesterday's close and below yesterday's low, and then it is all set for going downside. So trying to go up now, as we said, let's wait and watch around these range of 10,415 or 20, and there might be one more round of selling which might come through. Try to understand this is the expiry week. This is what we are trying to look for day in, day out. That expiry week can become more volatile, and this is what we are trying to see. Now, talking about stocks does not make much sense today, but still we look into the gainers and losers list. And important is the option structure that we had placed. Let us take and understand where it is going now, so that we also know our risk reward. So what is happening on the gainers list? Clearly the commodity and the construction pack is up. So the cement or Vedanta or Gale, I can say the entire commodity segment is up. But if you see, apart from the top two, the rest gainers are only 0.6 or 0.5 or so. So if I go in the extended list, one thing is clear, there is no bank available over here except for ICICI, which is tad bit 0.5% up. So what I see or understand over here, the farmers or Infi and TCS, that's the IT pack, the construction pack, and Lupin. So Lupin was down so much, so it is just covering a bit or so, but more or less if I see, the IT is showing some strength and the construction space or the commodity. So clearly the banks would become the losers. So you have IndusInd Bank, the strong bank, on the losing side, Bajaj Finance on the losing side, and then you also have some IT. So Tech Mahindra has been falling from last 3 days now, and even Infi and TCS are up, but Tech Mahindra is taking away some gains. So what's happening over here? The bigger fall has come from Tata Steel, back of the news of Bhushan Steel. Good for Bhushan Steel, but bad for Tata Steel. But the point here is, if you see and understand, end of the day, Tata Steel will recover very fast. Okay, so right now it is loser, maybe couple of days, but towards our result season, you should keep an eye on Tata Steel. That can become a good bet, which we wanted it to correct, and it's correcting. Now it's also Z, which is corrected a lot. That's amazing and good for us, right? So strong scripts are correcting. That is a one good feature for us, because it can always give you a good risk reward trades. India Bull Housing, good results, correcting. L&T, which has not been correcting so far, is now seeing correction. So let's take some of these scripts to understand how far down they can go, L&T and Z and Tata Steel. So when I go out and let's see, so let's pick up a daily chart, and if we take L&T, so L&T has been running strong every day, but now what has happened from this base 1288, right? It has come back down and it is trying to test the same base. So it is a very good structure which has been formed on L&T. It has come exactly to the point or the area of support where we wanted. Let us see if supports are taken around these areas or not, right? So L&T seems to be a very good bet. Then we have Z, which has corrected, and it is correct in the process of correction as well. What do we see on Z? Z has also acquired some of the MT Educare business and stuff. So obviously the cash will go out from the balance sheet. But what I see or understand over here, this was the base of 590, which was formed and was not going higher than 590. So it was trying to reach high on the top. It never went above the Moribazu. And then what I see over here, the important point for me to understand was this level. Continuously 590 were tested multiple times. It went down, and now today it breached the prior bounce which was there. So forming a double bottom kind of formation, but it has not gone up right now. So what I see from last 3-4 days, it's been falling down. And if you see the base, which is around 557, has been a strong base. So it should take some support over here, but if it does not, very good, because if it does not, we have a fall straight away towards 525 or so, and that would be the area of our interest, right? So good scripts undergoing a correction certainly means you can always look out and keep an eye on these kind of scripts to trade on. So these are not banking scripts and they are nowhere affected by them. So specifically, let's say IndusInd Bank, where the banking, from the banking pack, it's one of the strongest bank now. But what I see over here, it is also coming back to its support zone. So IndusInd Bank, as we had discussed prior, as with Kotak Bank, if I see, so Kotak Bank was strong. Yeah, here it is. It was strong. It is not going down. But what I see over here, it opens today, gap up, and then selling is taking place. So if Bank Nifty has to correct around 100 or basically around 800 points, obviously even Kotak Bank has to go down, right? So it won't be spared, and even Kotak Bank will go down. So HDFC Bank will play a huge role now to make or break Bank Nifty, because the rest of all the bank ICICI Axis are down. Now what I see on HDFC Bank is something very interesting, right? It was making multiple lows at the same point, gap up, bearish, and then slightly down. And today what's happening? It is clearly undergoing a fall. So now try to understand, HDFC Bank is coming at a very crucial juncture of 1855. If this is taken out, then you will see a good correction in HDFC Bank straight away towards 1800 or so, right? So 50 odd points or 3% out on HDFC Bank obviously will provide a huge downside to Bank Nifty. So the crucial level for Bank Nifty, if it has to breach, this is a similar abandoned baby kind of formation where it was gap down and gap up, which we saw prior as well. What's happening in Nifty as well. So the point is, if this point is taken out, 1846, then you're looking for 1800 on the cards, right? So this is where things are, and it is not seeming to be in the support zone. So the HDFC Bank still has room to go down, which can bring Bank Nifty further down. So Kotak has not yet gone down. IndusInd Bank, yes, it has gone down. ICICI has been seeing some gains, but what I see on even on ICICI side, agreed it has seen gains, but then it is now giving away all the gains. Important is the level even for ICICI is 316, because this was the level where continuous buying took place, and this is from where the rally had taken place. It comes back to the same zone. So these are important crucial levels at which all these scripts are coming out for HDFC Bank and for ICICI Bank, and if they both close down, obviously there is a clear indication of Bank Nifty becoming further weak. All right. So back of Bank Nifty, try to understand which stocks can become very more interesting to understand where we can look out for our own constructive buys. Now let's look at option chain of Nifty and Bank Nifty, just to understand if there was a fall like this right in the morning, does it provide any kind of uptick in our bear ratio. So let's take Nifty. Let's recalculate. So Nifty 22nd Feb expiry. So we had basically taken some put options. So let us first note it down. So 3 put options is what we were trying to target. Okay. Now what we are trying to understand from this, how the Saturday Sunday role is being played. More than that, the time value basically will now work in the favor of bear ratio. Okay. So when we were doing this Nifty, we had basically looked at 10,400, 10,200, and 10,000, right? And what I see over here in 10,400, the put option, so this is on the right hand side. So 10,400, if you go down over here, is now coming out to be 80 bucks. So almost out of the money has become at the money. So that is why the premium has gone up 80 bucks. And then you have 200, which is around 22 or so. And then you have last is 10,000, which is 6.5 rupees or so. So what's happening over here? So if I calculate my spread, which is 80 minus 22 minus 6. Now why minus? Because we are selling these two and we had bought 10,400. So 26 and 6 is around 28 bucks, correct? So it is roughly around 80 minus 28, which comes around, so 30 is around 52 or so, right? So the spread, which was 20 bucks, has now been in the journey towards 50 rupees. So this is one of the good sign which we see. Now why it has happened? Because of two reasons. Because the Nifty has also gone down, you can say from 10,500 when we had placed this bet, or we are trying to understand this framework, it has come to 10,400. So 100 points down in my favor. That is where the spread started going up. More than that, I would say the second point which one should understand, the time value kills out, because Saturday, Sunday, what happened over here, the premiums went down, specifically of 10,000. Okay, again 10,200 is more likely, market is seeing it can come, so the premium yet has not gone down. But if you wait for a couple more days, these 22 and 6 will basically come down almost to half. So 3, and I'll get 3 points from here, 11 points from here, again 15, 20 points from here, it will automatically become 70 points. And if Nifty goes down from 10,400 further, at least, let's say minimum, if it goes down to 10,300, which is very likely, and if it comes to 200, obviously you'll get 200 points. But if it comes to 10,300, there's an easy chance of getting 120 points on the spread. Okay, and if it comes to 10,200, which is our ultimate goal, this is what we want at the time of expiry, towards that mark, clearly outgoes or reaches to our target of 200. So what's happening over here, the risk reward is amazingly in our favor. So these are the kind of spreads which one always should look at if they are trading in options. Now try to understand, selling an extra option is very difficult, okay, and risky as well. So you should not do this unless you have prior experience. But doing this is very safe. Why it is safe? By doing buying and selling is basically making a bear spread. Now the point here is, when you do a bear spread, there is a fixed loss and fixed profit, right? So this is fine, but doing this takes a lot of experience. But the point which we try to make you learn every time when these opportunity arise, the risk reward is very, very good. Okay, so this is what you need to always target or understand. So that is there. Now before we close today, I had some interesting patterns which I had found, which I would like to discuss. Now what I have pulled out is basically SPX, which is S&P 500 of US. Okay, it's a weekly chart. So let us understand what has happened over there. Now we had already discussed this. If you see from the bottom where the rally had taken place, the rise was fine, but over here the rise was faster. So if I go out and just connect some of the lines over here, just to understand the base formation. So let's remove this. The point is pretty much clear right from just connecting the base. Let us see how the trajectory has been. So this was a base formation of the last low which was formed. From that low, if I try to connect the previous low, this is where you reach. The most important uptick which had come was from this rally towards this point, if I need to say. So if I connect even that from this end, and the last part, or I can say the last rally, was very steep. So what's happening over here, the rise was there slowly and steadily, but the point here is in the last part and the second last part, the fall was very sorry, the rise was very steep. Now, as we have always said, from this point 2570, the rise was too fast, and that is where the correction came in, and it almost reached back to the same point, right? So it will reach back to this point. It has to settle over here. It will take some time. It might also come down and finish off the rise which has happened prior as well. So the second point of understanding is 2500 kind of levels, which is also possible. So when I put 2 points over here, 2500, and this was the low 2570. So these are the points where a test can come back and it can test again. Now what you need to understand from the chart, which is clearly my agenda of understanding, after the rise, the engulfing pattern was formed at the top. More than that, there was something called as gap down on weekly chart. So weekly basis. Now if I keep looking at S&P, I only look at one number, which is 2750. Now why do I look at 2750? Is because this is the make and break situation for S&P 500. If it doesn't go above 2750, I agree it has recovered as compared to Nifty. Nifty has not, but or Bank Nifty has not. But in S&P 500, one thing is clearly visible. 2750 clearly shows that if it has not breached 2750, you have one more downside to come by, right? So this is there. We need to keep it on back of your mind, and it is a very important point to understand. Try to understand when will the fall come. So my assumption is in the next 2 weeks or 3 weeks, there will be a correction in S&P, bringing it down towards this 2600 or 2650 kind of levels. Okay, so upside is not there, and it can bring further downside in the next week of expiry. So in first week of March, you can see one more kind of correction. So if we see that S&P is on a very high resistance zone, we need to be a little cautious on Nifty. So you can find Nifty and Bank Nifty going further down, right? So that is one important thing. It is in the prior basic very strong resistance zone, which you should keep in mind. Second chart which I wanted to pull out today was GC. So GC is basically the gold chart. What I see on gold is something very interesting. Now, people who have not tracked gold, let me just give you a small base. What had happened in 2009, the correction in equity markets, and after that equities did not perform. Who performed? It was gold, right? And then it went sideways, and when equity started performing, gold started sliding. So one thing is clear indication on the bigger time frame, that if gold starts going up the way it went here, right, over here, continuous resistance were made, and one fine day it goes above this, and then it starts a new rally, and then it comes back because now the equity charts have performed. Now what I am seeing over here on the gold front, it gives me a start of an early indication of something very interesting. What has happened over here, it went down, it moved almost sideways, continuous lows were made, okay, and the entire rally from where it had started has been brought back to the same level, let's say 1000, right? So that is clearly visible. that the entire rally has been taken out. After that, what is happening over here? A quick bounce takes place and reaches back to the level of resistance, right? A higher resistance level where multiple times the selling has taken place. So what I see over here, 1000, 1400 or 1200, 1300 are the levels where continuous selling has taken place for gold. Now what is happening over here? The last time when it was up, it again came back down, but it is not going back down to the same levels. So this is a clear indication that buying is coming in to gold at every point of time. And that is why the higher lows have been made, and it is basically forming a triangle formation, and it might be here maybe for another 6 months or so. But try to understand, if it crosses 1400 the way it had crossed over here, right? So multiple times it tested over here, once and twice and thrice, and then it took a rally. Similarly, it will again might test one time, two time, three time over here in next 6 months. So my prediction for gold of 1400 level once taken out, there is a clear indication of 1600 level on the cards, right? So what you need to understand, if there is an uptick in gold rally, okay, or if one side, if gold goes up, it can reach to something called as 1800 or so. So when I see an uptick in the gold rally, one thing is clearly visible, not good for equity markets, right? Now sometimes people will ignore this. It is fine wherever gold is going, people will be mad after equities, but the point to understand, if it starts creeping up to level of 1600, then it might come down again, and then one fine day it will reach to 1800 or 1700 journey. So the point here is, this journey of 1400 to 1800 can take place for next 3 years or so, right? Or even this point of 1600 in next 2 years, 2.5 years, the journey is possible. So when I go and see the calendars, so 2018 is what we are standing right now. Let's say the journey from point A to point B can take place in next 3 years. Okay, so we are looking at a bigger crash as a red flag in the year of 2021 or 2022 kind of scenarios, right? Just to give a backdrop of how we understand the world market and how you should basically start interpreting these things, because these are the things which will help you understand when the markets are in euphoric zone and a crash can come by, right? So two charts, one is your SPX, S&P 500, one is your gold. Now before we go, since we have taken gold, let's take crude as well. So the last chart for the day, let's take, so we can take Brent crude. And something interesting which we had discussed already, Brent crude was that oil was also going up. So we can take WTI as well in the December explanation itself. So what we had seen from the top of 100, it has come down, reached almost to 30 or so. But what I see on the broader front, similar way structure is being formed on oil as well. Now what I see over here, first important thing is this. This was the very big resistance of $60 or so, and the correction came in. It never reached to this level ever. And this was the first point in the time of November, December, where it had reached, and then it breached once and for all 66 or so on the upper side. Now, interesting fact, what we need to understand over here, it breached, the rally was very fast, correct? It went one way up and it again came back down. So the fall off which took place in oil from the highs was very fast, same as we saw in S&P 500. But what I see over here after the fall, something which is very, very interesting. After the fall, if you zoom in and try to understand something which is very unique, after a huge fall, what's happening? It is not going down. So a follow-up fall is not happening. More than that, green candles are formed. This is a clear indication of oil making a new high is likely, or it is in the making, right? So the important level for us to understand on the weekly basis is 64, 65 levels on WTI. And then if it crosses this, you can basically see further going up. So this WTI gold is normally trades lower than the Brent. So Brent is normally $3-4 up. So this high was 66, and in Brent it was around 69 or $70. But what I try to understand, see, the charts would look same. Important is the huge fall took place, and yet it is not falling down. And this was the important point where the rally took place. The prior resistance was there. It is now becoming a good support for oil. So what's happening over here? Something very strange in the entire global setup. Gold is trying to inch up, or a breakout is possible in gold. What's happening in oil? It is also inching higher, and you can see oil also coming out to be $75 or so. Since the fall was fast, the rise will also be faster, right? So this is the point where the rise can take place on the oil as well. Let's say the upside can be 75, but if I go out and try to see where is it possible to go, 75 becomes a reasonable target, because this was the multiple level of support and this was broken. Obviously this will become your resistance. So at least a rally from the 60 to $75 is again likely on the cards. So try to understand this. On the broader structure, things are not looking good, especially for India. So oil might rise, gold might rise, equity might not perform. But obviously it doesn't happen that oil goes up, equity goes down. It doesn't happen that gold goes up, equity goes down. When they reach to one extreme, okay, then it normally takes 3 years or 4 years to happen. So that is why I'm trying to say, keeping all these in mind, when we are standing 2018, okay, so 19, 20 is what you add, and more 2 years. So 19, 20, 19, 21, 22, sorry, 2021 and 2022 is a very crucial year for us to understand. So this is what I think, where markets can head into correction mode, and I can pull out a year saying that 2021, 2022 are the biggest crucial year for us. And we can see this from today itself. Why is it going to be there? Because oil is creeping high. Then you have S&P 500, which is acting in the resistance zone. The steep rise has happened. So another rise can come, which would be faster than this one as well, right? So it is entering into your 90-degree phase, which will happen in the matter of next 4 years, and then you can see some sort of corrections, right? So that is how you try to understand. That is why today I understood more. I brought out is S&P, oil, gold. These are the features that you should always charts, which you should also always look at only from weekly point of view, just to understand broader picture of the market, where they are heading, so that you are never trapped. And more so, obviously, in that 90-degree phase, we won't get trapped on Nifty as well, since we have our own structures. At least we are not trying to predict the crash, but we won't get buying in this particular mode. So we were bullish, but we never bought in this particular mode. This is what you need to understand, right? So that's it for today. We'll join in again tomorrow. We'll try to see if Nifty is heading closer down towards the level of 10,300 or no, or maybe towards the expiry. You can clearly see 10,000 on the cards, or 10,100, which is equally likely, right? Thank you very much. We'll connect again tomorrow.